And in our world business news, the United States and China began 2 days of talks on Monday, emphasizing common ground as the two countries discuss various topics concerning their relationship, including exchange rates. The annual strategic and economic dialogue gives the world's two biggest economies a chance to manage, if not resolve, their policy differences, experts believe.
And we're linked by our shared global responsibilities. We both serve as permanent members of the United Nations Security Council. We're both Pacific powers. And for many of the world's pressing challenges, it's a simple fact that when the United States and China are not at the table, the solution to the problem is less possible than when we are at the table.
There are both complementarities and clashes in our respective policies geared to ensure economic recovery. However, we have far more shared interests and cooperation than differences.
With the U.S. economy growing only modestly after the financial downturn and Washington still reliant on selling its debt to China, both countries have a stake in keeping relations on an even keel to foster global recovery. As Europe ponders Greece's economic fate, Standard & Poor's on Monday cut the country's rating for the fourth time since April 2010 to B from BB-, dragging it further into junk territory over concerns that a debt restructuring is increasingly likely. The move came as the European Union is looking into various scenarios on how to handle Greece's debt problem and to prevent a restructuring. This could include a second rescue loan, extending the existing loan payment schedule, or lowering interest rates. 1 year after Greece's €110 billion bailout by the EU and IMF, it is struggling with weak tax revenues due to the recession in the country it is in. Greece now said it is concentrating on scenarios on how to speed up its economic reform program in order to convince markets it can repay its debts. And over in the UK, last week it was Lloyds, this week Barclays Bank and HSBC announced they're giving up the fight over compensating customers to whom they wrongly sold insurance. The issue relates to PPIs, payment protection insurances, which were sold alongside mortgages and personal loans. Some customers were sold the policies even though they'd never be able to claim on them, and others bought them without even realizing it. Altogether, an estimated 16 million policies were missold. Last month, the court ruled that most UK banks were at fault, Barclays and HSBC, now decided not to appeal against the ruling. This will force the British lenders to take a combined hit of more than $2 billion, $1.2 billion, less than Lloyds set aside to cover for the compensation.
We have got a lot of people complaining about payment protection insurance, and of course the banks have been putting a lot of their complaints on hold for the last 6 months. There are an awful lot of people waiting for an answer.
This is now looking as if it's going to be, I think, the biggest mis-selling scandal we've had, bigger than endowment mortgages, bigger than pension mis-selling. So we're talking about an awful lot of people. Now, if you've already put a complaint in, the frustration is those claims have been on hold. They should now start moving.
What does all this mean for the share price of the two UK banks? Well, some analysts say that by giving in now, the impact will only be short-term.
The fact that they are not going to further argue against the FSA's decision is a short-term negative for share prices, but it's not a longer-term negative because this over-provisioning has already been taken into account by many analysts and, of course, the banks themselves. So we do see that any further negative price falls as a buying opportunity.
Microsoft Corporation is said to be in talks to buy internet call provider Skype Technologies for an estimated $8.5 billion, according to insiders. Microsoft is increasingly investing into the mobile and internet sector. The purchase of Skype would help its CEO Steve Ballmer lure more web users and narrow Google's lead in internet advertising. Also, a takeover by Microsoft would divert Skype from its previous plan, announced in August, to sell shares worth $100 million in an initial public offering. The Skype deal would be the largest for Microsoft in its 36-year history. Before we head back to news, let's take a quick look at the Asian equity, the commodity and the currency markets, and after that, Laura Buckwell is back with the news.